For many of us, the burden of home loan repayment has increased in the recent times. Why is that? Well, it has to do with something called MCLR, which is the marginal cost of fund-based lending rate. So, what is MCLR and how is it impacting your EMIs? Let's go into the depth and find out everything that you should know about this. But before that, make sure to subscribe to the Moneycontrol channel. MCLR is the minimum interest rate that a financial institution needs to charge for a specific loan. It is the internal benchmark rate that determines the interest rate for the loans given by the banks. The RBI introduced this in 2016 as a modification to the old base rate system. This was said to be done with an intention to pass on the benefits of the rate cuts to the borrower. However, this switch did not really impact the borrowers that much. And for this reason, the RBI in 2018 directed the banks to switch to an external lending benchmark so that the borrowers could get the benefits of the changes in the monetary policy. This led to the repo rate linked home loans, under which the borrowers get a lot of flexibility in their loan rates. Also, these loans are said to have more transparent rate setting mechanism and provide more certainty to the borrowers in anticipating the loan interest rates. So first, let's understand why the banks have increased the MCLR rates. See, when the RBI increased the repo rate, which is the rate at which the banks borrow from the RBI, most banks were slow to raise their MCLR. As of March 31st, the interest rate on home loans based on 1-year MCLR regime went up by 135 basis points or 1.35% compared to the home loans linked to the external benchmark based lending rate or EBLR, which is linked to the repo rate. And the home loans linked to the EBLR or repo rates had a rate hike of 250 basis points. That means the borrowers who had their MCLR reset in October or December were paying much lower interest rate compared to those with EBLR linked home loans. But now, as the repo rate hikes have stopped, the banks are adjusting the MCLR rates to the new circumstances. Now let's understand the impact of the rise in MCLR on your EMI with an example. So let's suppose that you have a home loan of Rs 10 lakh with a tenure of 10 years and an MCLR linked interest rate of 5%, and your current EMI is around Rs 10,000. Now, if the MCLR rate increases by 25 basis points, that is 0.25%, the new effective interest rate will become 5.25%, and the new EMI will be Rs 10,250. This means your monthly payment will increase by Rs 250 due to the interest rate hike. So as you saw in the example, the increase in the MCLR will make the home loans expensive. Now, coming to the main question, should you make the switch to the repo rate linked home loans? See, the repo rate linked lending rates are more transparent than the MCLR. Moreover, they have a faster transmission on their loan rates. But if the RBI decides to increase the rates in quick successions due to the market conditions, you will also find that the EMIs are rising with immediate effect. So, before deciding to switch to a repo-linked lending rate, you must compare the present rate of interest with the MCLR, the rate linked to the external benchmark, and the reset frequency. Do a calculation and take a decision only once you are sure that the savings are higher than the refinancing cost. Once you opt for the repo, you cannot switch back to the another benchmark rate. Also, if you are refinancing with a new lender, then your loan will be considered as a fresh application, and you will have to go through the entire home loan approval process again. After considering all this, if you still wish to transfer your home loan, how can you do it? Well, to transfer a home loan from MCLR regime to a repo-linked lending rate with the same bank, all you have to do is approach your bank and submit an application requesting to switch to RLLR, fill the required forms with your bank, and pay the levied fee. You should also negotiate your loan over RLLR if your creditworthiness has improved in the preceding 12 months. Lastly, you can contact the banks directly to inquire about the details of switching process, documents required, and other queries. So, if you found this video informative and simplified, don't miss our another video on how to reduce home loan burden, wherein we have explained 5 smart ways to reduce your home loan burden effectively. Also, don't forget to like, share and subscribe to the Moneycontrol channel for more such videos.